And good morning, everyone. John Hutchinson with Traders Reserve along with Jeff Wood. It is Wednesday, July 16th, 2025, 8:30 in the morning. Excuse me. Hope you're all having a good week this week. We certainly are. I think Millionaires Trading Club has already closed out several trades for over almost $1,500 in gains this week. So looks like a pretty positive start to the week. Let's hope that continues. This is just a PSA, public service announcement. I think next Monday afternoon at 4 o'clock. I'll get the details out by email here in the next day or so. We're going to hold a special happy hour at 4 p.m. So it'll be a Breakfast Club happy hour. So you can add bourbon to your coffee, I suppose. Um, to give you all the details on the Millionaires Trading Club trading conference taking place October 21 through 23 in Las Vegas, Nevada at the Hyatt Place Silverton Village. So we're going to give all the details and some of the big changes that we're making for this year's conference, plus a couple of really exciting announcements to accompany the conference. So look for the email on that over the weekend. Just a reminder, we'll hold it right here on the Traders Reserve Live platform. Can't say those words this early in the morning. Um, and get everybody registered. So set those dates aside. You'll be able to attend in person or virtually. Usually, uh, usually about 80% attend virtually. So don't feel like you have to travel. But if you want to travel, you're going to have a good time in Las Vegas this year. So I'll give you the what, the when, the where, the why, the how on Monday at 4 p.m. So set that on your calendar and don't miss that little happy hour event. Let me change my screen out for just a second. And future's a little bit mixed right now. Was it Morgan Stanley just came out with earnings a little bit ago that were positive. We have the producers price index here momentarily, which I'll take a look at in just a second. Let me see if I can make this screen bigger here. That's about what I can do. Hang on. But you can see up at the top here, Dow up, S&P up slightly, Nasdaq not a big surprise, pull back a little bit. Russell moving up well today. So see how that translates to all of our trades today. But something I wanted to take a look at here is I was looking back at my portfolio from 2024 and see if we make that a little bit bigger and make it a little bit bigger yet. Hopefully you can read that. This is a portfolio that I created in January of 2024. And a couple of quick lessons to share. One is patience and letting the market absorb the details, right? Whether it's growth or earnings around different stocks, following specific or certain trends, but the patience to let trades work for you. And I think it is reasonable to say that one of the difficulties as it relates to having patience as an options trader is you always have an expiration, right? You always have an expiration date. So there's a finality to your trade, whereas as a stock investor, that's not necessarily true. I mean, finality would be the stock goes to zero, or the company goes bankrupt. That would be finality. But as an investor, it's not the case. And for your purposes, at least following us at Traders Reserve, I think we want to help you, or at least I do, get back to thinking in terms of both as an investor and as a trader, but being able to separate those two functions. Um, if whether volatility goes up or goes down, I would expect it to go up at some point, right? That puts more time pressure, more profit pressure, more uh, expiration pressure on your options trades, but that's not the case necessarily as an investor. So let me show you an example of that. One of the stocks here that you can see is Dexcom. They are in the insulin market. And a year ago, a little over a year ago, they took a pretty heavy hit, about $50 a share. And so that was expensive. And the reason was because they were completely rebuilding their sales force. So their sales weren't meeting expectations. It's not like they fired everybody, but they reorganized and rebuilt their sales force. Well, a change like that takes time. It takes time to work through and to begin to show itself as earnings. And so one of the things that I had done with this stock was double the position. You can see the original position was in January of 2024, 13 shares, not a lot. But it was at one point, it was down $53 a share, maybe a little bit more than that. So it was a pretty hefty loss at that time. So I added an additional 13 shares at $70, and that has significantly reduced the overall loss. Even though the company hasn't necessarily beaten, let's take a look. You can see they've missed earnings, missed earnings. Hey, they beat earnings here 3 quarters ago, right? But you can see on the chart, having patience. If we go back to a weekly chart, so here's 2024, the beginning. Here's that big sell-off right there. And then having the patience to let this just work itself back. Now, from where I'm at right now, need that 50 to move over the 200. That would be nice. That's on a weekly period. So that's 50 weeks versus 200 weeks. But I'm getting to a point where I'm within $10 of break even on that trade in a worst case scenario. You can see better on the daily chart, the 50 now closing in on the 200 day. So that movement in the price is giving me a reason to stay calm, to not worry. It's one stock, it's one position in my portfolio here. I don't have to freak out about it. So the second one that I want to look at, because this one is a little unusual, is a little company called Nextracker, stock symbol NXT. Given the current conditions uh, and their industry, which is in solar, uh, that's not exactly a favorable industry right now. And yet, this is a stock which, when I pointed it out back in 2024, I said you've got to keep an eye on this stock because they're an earnings hog. And you can see that this is currently up 35% since January, but it has taken a long time to get there. And you can see this better on the weekly chart. Right here's 2024. This is still a relatively new stock. Had a nice move up, collapsed further, and it has, it is finally broken back out to new highs, to new 52-week highs recently. But when you look at this on an earnings basis, beating earnings by 33%, beating earnings by 77%, beating earnings by 60%, right? These are the types of companies, both as a trader, as an investor, that you want to, and we want to hunt down, find, trade, or invest in. This company you can see on the lower half here in sales, right? Consistent rise in sales. Their earnings were dead in 2023, but they are certainly printing money now in 2024 and 2025. So there's a rationale here behind this stock. Look at the PE ratios. This stock is trading at 14 times forward earnings. Now, it is in an industry that is out of favor, being in solar. But because of what they do, they provide it's sun tracking devices. Just think of it that way, right? It's a mechanism that helps solar panels track the movement of the sun across the sky. So you've heard me say, if you've been around Traders Reserve for a long time, you've heard me talk about foundation stocks, stocks that provide a foundation inside of an industry. And this is one of those types of stocks because they're not trying to sell solar panels. They're selling to companies that are utilizing solar panels in any capacity. So it's a stock that finally broke out and has done very well this year. Still one of my best picks from a couple of years ago in the defense industry, Howmet in aerospace. That's up 244%. No question, one of the best picks in the portfolio. But this is still a stock with room to run. I mean, look at this chart. There's a long breakout since April. It does have options. They are tradable. We have traded them in the past. This is a stock that I would keep on your radar as a potential play, both as an investment, as an options trade. Look, earnings positive, positive, positive last 3 quarters. It does pay a dividend. It isn't much. It's gumball machine change. So don't count on the dividend on that one. But their performance has been spectacular. They are in one of those long-term uptrends. This is a stock that probably still has room to run. Getting a little slow at the top right now, so I might look for a pullback, but only trading at 44 times forward earnings and beating earnings. How well? 10% in the last quarter, 3% the quarter before that, 8%. So consistently beating by, they're not beating earnings by a penny. They're beating earnings by percent multiples. That's the kind of stock that Wall Street's going to be looking for, especially in the defense industry, as more money from the recent passage of the budget bill gets put into the Defense Department. So as we go through the next several months, we'll be looking at more stocks and choices. I want to say options, but more stocks in the defense area. I do think that you're going to see more opportunity in that area, both as a trader and as an investor. So a little bit of a preamble. Jeff, I don't know if you're ready to go, if you're awake yet, but I'll turn
I'm
over to
ready.
you for your slides.
Sure, let's do this. Good morning, everybody. Sorry, don't mean to yell. It's early, but gotta get pumped. Gotta get ready for the day. All right, let's
Okay, pumped or pumped?
pumped. You gotta
Pumped.
get like
Okay.
excited. Like, let's do this.
Please don't get punked on our show.
No, no punking. No punking. Pumped. All right. Um, so let's talk about some news of the day, news for the rest of the week, what to watch out for the rest of the week. As far as Tariff Watch goes, there's some news about pharmaceutical tariffs uh, from the administration saying probably at the end of the month. They want to do a slow ramp and then get very high after a year. So they want more pharmaceutical companies to start building factories and building all that stuff, in-house, so to say, in the U.S. But so we'll see how that affects the pharmaceutical companies if you like trading medical stocks. The other one though is semiconductor tariffs. The administration said similar measures likely to follow pharmaceuticals. So more news on semiconductors later this month, and well, at the end of July is only 2 weeks away. So something to look out for. And then there are tariffs on smaller countries. We had lots of letters going out about that yesterday and through the rest of this week. And again, we're looking for trade agreements before August 1st. So volatility the next 2 weeks. I know we talked about this on Monday. Volatility over the next 2 weeks, likely, to get a little choppy in the markets. So need to find individual stocks that you're happy with, and go from there, and then adjust for volatility. Now, as John mentioned, we do have bank earnings coming out. Wells Fargo, yesterday, shares were down over 5% because they trimmed their full year net income guidance. So we talked about that too. What will the CEOs, CFOs all say about earnings? Are they going, even if they beat earnings, are they going to talk about trimming full year guidance? And so far, mixed reactions. Wells Fargo said, we're trimming our yearly guidance. Newmont Mining, we had a CFO resign, so stock didn't like that one yesterday. AMD and Nvidia both positive due to their plan to resume chip sales in China. And then we also had Boston's Fed Susan Collins say that the economic conditions are okay, so that the Fed actually has time to carefully assess incoming data. Remember, Powell gets a lot of flack. This is something that John has talked about before. Powell gets a lot of flack, but remember, it is the entire Fed board of governors that make a decision. So when you have to listen for the other board members too. You can replace Powell, but there is, as long as we still have what we have right now, there's still a board of governors that make a decision. So that does mean that with yesterday's CPI reports, we'll see what PPI says today, but there's essentially a 97.4% chance of no change in July rate cut meeting. But with September getting rate cuts above 50%, remember the Fed said that they do want to cut rates 2 times this year. So if they don't do it in July, they're running out of time. So that puts September rate cuts now just north of 50%.
And that's falling, by the way.
Yes, right.
That was over 90% just 2 weeks ago.
Yeah, yeah. So we'll see, but they so far we've seen a lot, or we've heard a lot of people say that they still want to cut rates 2 more times this year.
But
So
let's step back for that for 1 second. I know you
yeah,
have this slide here. There's
yeah, yeah.
something that as especially as options traders relying on your portfolio for income, something I want you to pay attention to. And Jeff,
You want
let's
me to
make a
stop
side
share?
note for the two of us to do this, maybe as a special report in the next couple of weeks.
Sure.
But everyone needs to go back and look at the 2015, 16, 17 period in the cash asset markets. This insistence to essentially, I don't think it's hyperbole to say that Trump wants interest rates by the Fed at zero, or at least near zero. But keep in mind that the Treasury yield during those periods before the Fed started to raise rates during Trump's first term, the Treasury yields were just north of 2% versus currently they're in the 4% range. That's a 50% reduction in yield for buyers or holders of US Treasuries, 10-year Treasuries. That's not a small cut. And I'm not saying I can't predict that that's what will happen, but when you look at essentially the ZIRP period, zero interest rate policy, Treasury yields were essentially nil from much of the 6, 7 years that they ran at zero. The bank interest rates that were paid on savings, checkings, money markets, et cetera, all collapsed to less than 2% on long-term CDs and less than 0.5%, 0.5% on cash accounts. Uh, that's a warning sign to me. That's not, we don't want to see that happen again. But if there is this adamance on the part of the administration to replace or even shadow Fed Jerome Powell and not trust their rate policy, yeah, they're going to be wrong sometimes. They're going to be late. They were late raising interest rates back in 2021. Um, but the economy is solid. And what the Fed has been battling is not having a return to inflation being above 3% essentially. We're right on the cusp of that. At the CPI yesterday, long-term inflation was 2.9%. So there's a
Well,
reason
I
why
have
the
a
Fed
slide for
isn't
that too.
rushing. So I'm not a fan of seeing this right now on two fronts. One, the independence of the Fed to me is important, and should not have political influence by either party or any party for that matter. Uh, and and two, the the key to this economy right now is as much certainty as is possible. We're getting that, right? The PPI just came out, Producers Price Index came out, essentially flat. That's good. That means that absent or inclusive of tariffs, producers' prices did not expand significantly. First read. So I haven't looked at the details, but the core was zero. And so no movement in producer prices. That's a good sign. Um, but this insistence on rapidly reducing interest rates is, to me, a net negative to us as investors, as bank customers, cash accounts, and it puts more pressure on you, or it will put more pressure on you to generate income from your portfolio. And that's a fear for me, and not because you can't handle it, but because we always want to have risk in the back of our minds. So I'm sorry for the long diatribe on that. It's one of the areas that uh, worries me because it becomes unpredictable. uh, and Wall Street's not going to like that. So anyway, things to keep in mind. Keep in mind. And again, Jeff and I will do a historical look back here in the next couple of weeks during one of our breakfast clubs upcoming.
Yeah, that sounds fun.
Said no one ever.
Do you not know that I love research
I
and
do. I do.
I mean, come on now, that actually does sound fun. Okay, so key reports coming out today. This is just so you're aware, especially those who love trading zero DTEs. Just be aware that Bank of America, Morgan Stanley, and Goldman Sachs all coming out with earnings today. Also, Johnson Johnson, Progressive, United Airlines. United Airlines definitely one to watch out for because Delta Airlines was it last Friday? Blew out earnings and so what we were having actually, if you look at some of the data, is that consumer prices were going up. Oddly enough, airfare had been trending lower. It didn't feel like it. Every time I look for a flight, it feels like the the prices are going up. But anyway, airfare is actually trending a little bit lower. Part of it is consolidation. Part of it is jamming flights with more and more people. And then also we have income coming in from some of those higher end cabins, whatever else. Anyway, airfare prices trending a little bit lower, even though inflation ticking higher. So that's what helped airlines go forward. So it'll be interesting to see what United Airlines comes out with. Just as a reminder, S&P 500 are companies projected to deliver 2.8% year-over-year earnings growth. So while that says yay, earnings growth, that does mark the smallest quarterly increase in the last 2 years.
Bank of America and Goldman Sachs are both out. Both were beats.
Oh,
Bank of America beating 85 cents expected with 89-cent reported. Uh, and Goldman Sachs beat by $1.32. So earnings per share of 10.91 versus 9.59 expected. So three banks investment houses reporting this morning: Bank of America, Morgan Stanley, and Goldman Sachs, all beating on the earnings front.
which is nice. So the futures right now, which it can always change as soon as the market opens, but futures right now are back into the positive. So
Temporarily, I would be attacking.
I know, yeah, but
No, no, temporarily I would be attacking those financial stocks because
oh yeah,
feels like that's where the money is right now.
yeah, and that's actually what we financials were one of those sectors that we talked about on Monday. Also, why in MTC, well, part because Bitcoin, part because financial. We traded Coinbase, but anyway. So economic calendar, yes, this is a little bit. This was taken about 8:15. So some of these, the core PPI report did come out at 8:30, and that is the only real major economic. Oh, there's my pointer, my laser pointer. The core PPI report was really the only major economic report came out, and that was pre-market today. So that is good news. As far as CPI, what John was talking about, year over year, 2.7%. It did tick higher from the forecast of 2.6%. Sort of the mixed reaction to things, even though late yesterday, pretty much after 3:30, it wasn't so mixed reaction, but the market kind of went straight down. But core CPI month over month. So core, it removes food and energy because those are more volatile. I don't quite I mean, I guess, we have to take data for everything, but it's just always interesting to me because food and energy is, yeah, I don't get to remove that from my budget. But anyway, they removed that, and core CPI was actually a little bit lower than the forecast. So it was at least month over month. So it was just kind of mixed bag of data yesterday. But the good news is if the PPI report is already out and that's showing mostly flat, then that certainly gives the administration room to say, hey, we're on the right path with tariffs, at least for now. So we'll see how that goes. But at least no surprise should be positive for the market. All right, I know this is really small, but you should be able to take a screenshot of this if you desire. This is just a scan I like to do midweek, especially if I'm looking at different trading ideas, things that I may not know about stocks that I may not know about. This is a very simple one with stock price over $1. They are all optionable weekly. They're all optionable and they all have weekly expirations, which is fascinating that this one for $1.74 is optionable. But anyway, and then I just sort the data by a 5-day percent change. So what in the world is moving over the last 5 days? You can do this with a 3-day to see kind of what's moving since Monday if you want. I just did 5-day for the sake of today. MP Materials, one that you may not be aware of, or maybe you are because it made headline news yesterday. They're making all sorts of deals. They are in metal mining. They're making all sorts of deals with Apple and some of the other major tech plays. So that stock currently 58.22, but has made an 86% change in the last 5 days. So if you're looking for like breakout candidates or things like that, just it's a very, very simple scan that you can do and look for. Oh, and also I did volume had to be over 500,000 shares. When I initially did this, I was just getting all these like really, some of these are low priced stocks, which also is why they are on the percent change list, because a $4 stock, moving up a couple of pennies is a good percent change. But so you can always do this, and maybe you want to filter out of stocks over $30. Some of those, especially as John was talking about stocks earlier today, some of those low cost stocks are the ones that are just kind of starting out. They have a customer base, they have whatever, but those are ones that can sometimes give you pretty high returns. Again, if you look at this list in the last column, a lot of these are actually under $20, and with pretty nice size return over the last 5 days. So anyway, wanted to show you that. And then one last thing, I know we're trying to get out in 30 minutes. So I wanted to give you a scan, a scan of the day. And then I wanted to give you a trade idea of the day. So bear with me. I'm going to get over to Think or Swim. Then we'll get you out and get you about your day for the rest of the day here.
So while Jeff's bringing that up, I will share the strangest investing idea that I've heard today. And again, this will be something we'll bring to you in the near future. Write this down. You're not going to hear it anywhere else, probably. Asteroid mining. I'm not
Yes.
kidding. I know you probably think, okay, what's he putting in his coffee this morning? But I'm not kidding. This is a real thing. We'll do a little bit of research on this for a future session as well. But while we were waiting for Jeff, I just wanted to give you your good laugh for the day. So off you go,
Oh,
Jeff.
it's not a laugh. It's a real thing. We're
I
doing
know.
this. All right. So this is, trying to come up with a free trade idea for everyone, but that doesn't compete with any of our paid services. So I was looking at the company Roblox. If you have kids or grandkids that are, I don't know, under 15, you probably know about Roblox. They're essentially a computer gaming company, but it's more than this, just that, because you actually have a marketplace where kids who develop games can also put their games out on the platform. There are some like 10-year-olds who are making video games, and these 10-year-olds are making crazy amounts of money, which is awesome to see. So anyway, the reason that I brought this up though is just a solid run over the last couple of months. Again, this matches the market. The market has had a great rebound really since about April 7th. This did break out to new highs yesterday. We had a huge volume bar and price bar just 2 days ago. So there was a continuation of that yesterday. And what I liked about the one 2 days ago is it broke out of this consolidation area that it has been sort of stuck in since June. So we finally got increase in volume, finally got increase in price to break through an area of resistance. All of that is good. Now, I know that Traders Reserve folks love selling cash secured puts. So I know this isn't, but this is where I'm putting in my own spin and being a little bit different than what our other paid services do. People who know me also know that I love trading Microsoft, and I love trading Microsoft at 90 days to expiration. So I said, if I love trading spreads on Microsoft at 90 days to expiration, could I do a cash secured put with a 90-day expiration? And what would that be like? So I've been trading those on my own in the background, saying like, does it really take 90 days? Because if you look at the credit that you're getting, and if you look at 90 days, I'm like, this is a horrible return. Why would anyone do this? However, and it doesn't, I'll be the first to admit, when the market goes straight up, really since April, it helps. It's a great time to be doing these trades. But the ones that I've been doing, even setting up at 90 days to expiration, I've been getting out in 15 to 20 days, calendar days, even not even trading days. So 15 to 20 calendar days. Some of these have been closing out. So again, I understand that that's part in because of the price, delta is going to, or price movement is always going to be, the biggest driver of option prices. So when the price keeps going up, I get it. Yes, we do have earnings, but if you want to trade over earnings, um, or you need to trade over earnings, then what I tend to do is I go out further. So going out all the way to the September 19th expiration, which is actually only 60 days to expiration. I did put in for 90, and I ended up settling on the 60, 65-ish, whatever that is. So it went out to the September 19th expiration, and I found the 87.50 strike price. It is going, I'll show in the Analyze tab, it's going for $2.25. So this trade is going to cost $8,750 minus the $2 or minus the 225. So $8,500 is what you need to put on this trade. Unless you have a margin account, then it's even less than that. But this represents 87.50 represents about a 22% discount to current prices. So if you don't think Roblox is going to fall apart, strong stock, everything else, if you don't think Roblox is going to fall apart by 22%, don't think of a 90-day or 65-day to expiration as like, oh, I need to wait and for the until expiration. A lot of these, like I said, have been exiting 15 to 20 calendar days. So whether you do this trade or not, or you can always do it in a paper account and just kind of track it. Just one of the things I wanted to share on a Wednesday is a little bit different ways of thinking about what we do at Traders Reserve, or different ways of thinking about what you may already do. So 90-day or 60 to 90-day expiration, $2.25 gets you a 22% discount. And for those, who it's a cash secured put, right? So the cash is secured and stored in your account. If it does go all the way down to 87.50, then you are in Roblox at a 22% discount to current prices. Now, that's a fancy way, that a lot of people say, maybe if it goes down 22%, that's because there's a fundamental change in Roblox. So, keep that in mind. It
But
does
when
represent a 22% discount, but that doesn't necessarily mean that that's going to be good, down there. What's that, John?
when you're executing these, where are you setting your profit target?
So yeah, that's a good point. Usually 50 to 65%. It just
Okay.
it depends.
Start at 50% then and see how that works for you folks.
Yeah.
Okay.
Anyway, so I just wanted to share that with you, and now I'm done. So
All right, so there we go. We have our analysis, our trade idea of the day, and again, the reminder next Monday, 4 p.m. We'll get email reminders out to everybody, the happy hour to cover the Millionaires Trading Club live event coming up in October. For everyone here at Traders Reserve, hope you have a great trading day today. We have Millionaires Trading Club at 11 a.m., Income Masters at 12:30. So if you're whichever of those or if both of those, we'll see you in your upcoming live session. Hope everyone has a great day, and we'll see you again next Monday.